You're looking at the charts, right? You see candlesticks. You see green candlesticks and you see red candlesticks, okay? The green candlesticks represents buyers, the red candlesticks represents sellers, okay? So there's two types of transactions that's being taking place on every chart. That is buyers and sellers, okay? There's three different directions where the market move on every chart. The market goes up, meaning that buyers are buying. The market goes down, meaning sellers are selling. And the market ranges or trade sideways, meaning that buyers and sellers are agreeing on a price or a price range, right? It means that there's liquidity being built, liquidity is happening. There is uncertainty on who's in control when the market is trading sideways, okay? That's that. Lock it in. All right, so when the market is going up, okay, we call that a bullish trend. Okay, we call that a bullish trend. So when you hear the market refer to bulls, we are talking about buyers. Same if the market is going down, that is a bearish trend. So when you hear references of bears, we are talking about sellers. Okay, you may also hear phrases like bullish market. Or right now we're in a bullish market. That means that we're in an uptrend. Price is going up. Buyers are stepping in, and vice versa for bears or the market moving to the downside. Now, in order to determine, right, the true trend of the market, you must understand market structure. Okay, that is the single most important first thing that I would stress to anybody that's just getting into this game. You must understand market structure, right? It's not hard to understand, but it does come with practice, and it comes with getting your eyes familiar with looking at it. But let me show you something, y'all. This is the weekly chart. Now, this is the weekly. There's several different time frames on these charts, okay? We use some people, we got the weekly, we have the daily, we have the 4 hour, the 1 hour, the 30-minute, 15-minute, 5-minute. It even go down to the 1 minute and even 15 seconds, okay? Each time frame has its significance, okay? You are not going to use every single time frame. It depends on what you're doing, right? That would determine what time frame you use. So, for example, if I use I day trade, okay? So for me, I do a top-down analysis. So I do use the weekly, the daily, and the 4 hour. That helps me understand my trend bias. That helps me understand overall what is the market doing, okay? For confirmation and execution, meaning for me to just confirm what I'm seeing on the higher time frame and to make an actual trade, I do it on the lower time frames, right? So we're talking like, I'll look at the 1 hour, but then the 15-minute and the 5-minute, right? That's where I make my execution, okay? So I use different time frames. Some people use 1 or 2 time frames. It's all about your strategy, and it's all about what you're trading. Swing traders are who trade further out. They may just use the weekly, the daily, and the 4 hour. Like, I've seen it, I hear it all the time. They just use those 3 time frames, and they do very well. So, all right, right now we're on a weekly time frame just to look further out. So look, let me show y'all something, man. Actually, let me give you the daily. I just need a little more price action. Let's get rid of this. Man, SPY is so choppy. All right, y'all, so look. Let's just start right here, right? This looks like an uptrend. We're going to start here, okay? We have a low. This green candle is a low. We're going to take it up to our next peak, okay? Like right here is a peak, and then it drops back down, right? So we're going to take it up. Let's just take it up here, right? This is the high before price pulled back or dropped down, right? So we have a low. It's higher. We have a higher green candle and a higher red candle, right? So this is a higher high. We're going to say higher high, okay? This is the furthest high before price drop down again, right? So we have a higher high, right? This is our previous low. Now price is pulling all the way back, but it stopped here. But this is a higher low because this low right? It pulled back for a low before it returns high again. So, but this low is higher than this low from where we started. Okay, so we're at a high, right? We're at a low, right here. Okay, now price is pushing further up for a higher high, right? Now we have a lower low. You see these red candles? You see not just the red candles, right? But just look at structure. Price pulled back. It was a very short and shallow pullback, but it pulled back, okay? So we still have a higher low, okay? Now look. Now we have a higher high, right? Or even with like here. Now look, let's look at this low. This low is higher than this low, so we still have a higher low. That still confirms that we are still in bullish structure. So bullish market structure consists of higher highs and lower lows. Okay, now let's just stop right here. Let me just stop this, okay? So when do we determine when we are no longer in a bullish structure, right? Like where does price, how do we determine when structure is broken, okay? So this is our higher low. When the higher low is broken, right, and we get a lower low below, like we're in a bullish structure and we get a lower low, you can consider that a broken structure, right? So again, we started low, we went high. We have a higher low, higher high, higher low, higher high, higher low. Now price didn't break. Structure didn't break right here. So we are technically still in a bullish trend. Right? So watch this. Let's see what we can we're gonna keep this going, okay? And this is the daily, y'all. So higher high, this high is higher than the previous high. Higher high, higher low. We're gonna go higher high, higher low. Higher high, right? Now this is actually a lower low. Now, again, structure is broken when we have a lower low. Now, structure is broken, but there was no confirmation of the structure being broken. So price can break structure, but then it'll push right back up. Okay? So this could have easily, if price would have continued to move down or gave us a confirmation from this level, then that would have been confirmation of a broken structure, right? Structure was broken here, then it returned and redeemed itself, right? So we have a lower low here. Now this is this is what we call a deep pullback. Now, this is where we want to pay close attention because in these areas we can either get a reversal or the pullback could just be a deep, deep pullback for a higher move to the upside. That's where a lot of people get trapped at. That's where, a lot of FOMO kick in, which means fear of missing out. A lot of people want to jump in right here for a reversal. Everybody want to catch the reversal. But you got to be careful and wait for confirmation, right? Meaning that you want price to break below this, right? It'll break below, but then it'll come back up to this level. You want it to retest the resistance level. If we would have got that confirmation, then we could have entered here for the trade back down, but we didn't get that. So, yeah. So that's where we are with that, man. Same thing if we go into the downside. All right, so for bearish structure, okay? Same thing, man. We're going to go from, it's the opposite though, but the same concept, okay? So listen, we're going to start high, okay? For downtrends and bearish concepts, we have a high. This is the very bottom. This is the low, okay? Okay? Now we're trending low. So what we have here, this is a higher low. This is a lower high, right? This high is lower than this high. Look how high up this is. This is a lower high. Okay, that's definitely confirmation of, it's good confirmation of a downtrend. But most importantly, it's confirmation that sellers really stepped in because we have a lower high, okay? So now we have an even lower low. This low is lower than that low. Let's look at the next high. None of these highs is higher than the previous high. That's how you know we're trading low. Seller stepped in. We're going to the downside. We have a lower low. This high is lower than the last one. That's a lower high, lower low. Lower high, lower low. Lower high, lower low. Boom. That's how you look at market structure when it comes to looking at a downtrend. Okay, this is how you discover the trends, right? You just want to make sure that you're looking at the right time frame according to the market that you're trading and the strategy that you have. Okay, that's a whole nother conversation for another day. But this is basic market structure, y'all. Basic market structure. Okay, now how do we know when we're going to get a reversal? Okay, this is where your trend lines come in. There's a few ways to do this. Okay, so as you can see right here, boom, we had a temporary downtrend, right? I mean, this can easily just be a pullback, but for the sake of just understanding the concept, this is a downtrend, okay? Now let me show y'all something. Let's get rid of this. All right, so price stop here and then move back up. Let me show y'all something real simple. If you take your trend line, right? Drawing a trend line, I like to draw mine from wick to wick. 2 touches qualifies a trend line to be a trend line. Just 2 touches, okay? We could come way up here, but I can already see, like, I like to go off of the wicks, okay? So watch this. So nice break right there, right? We have 2 touches, first of all. 2 touches. And I hope this is making sense. Let me show you something. All right. These long, like sharp, I don't want to say sharp. These long, thin lines that come off these candlesticks are called wicks. The body of the candle is the body of the candle, right? That represents the open and the close of price. Now, I draw my trend line from wick to wick. So look, this is the first wick. See that? Boom. Got a second touch right here. Boom. Okay, 2 touches is good enough, okay? 2 touches is good enough. So one way to identify reversal in price is when price, first of all, it stalls. It stalled here at this lower low. It came right back up, right? So if it was going to follow this trend line, it wouldn't have even broken, retested it. We would have got a lower high up here, but instead it came out. You know, it flirted with this area for a minute. Price was liquidating. Buyers and sellers are agreeing, but then it came right back up. And then it came down to kind of retest it. It gave it a little, it retested the area, and then it came back up. That's a sign of reversal. Let me show you something. We got a break and retest out of that area. That gave us our confirmation for a reversal. All right, so look. So price stalled here. It didn't continue to go down. It didn't come up here for a lower high and then to trade back down. Instead, it broke the trend line. We got a breaking trend line, y'all. Now, it broke it. We didn't get the confirmation that it was a true reversal because it didn't give us a clean break and it didn't break out and retest it. So a break and retest is this. It broke out and then it came back to the trend line. Now, it don't have to always like completely touch it because we're also looking at price action, all right? And I'll get into that in a second. But it broke out and came back down to this area, retested it, showing that this is a stable support. Support is the floor. Support is where bulls give us the confirmation that we need. It's telling us, hey, listen, we're solid right here on this floor. We have our foundation, and we're pretty much ready to go up and push price up. This is the floor. We always want to look for a floor, right? Once it retested and gave us our floor, boom. This is normally where we'll enter at, like right here. It gave us our confirmation. What it do? It reversed out, pushed right back up. For our first high, lower low, then start all over. Then we look for another higher high. You see what I'm saying? Look, higher high, higher low, higher. You see what I'm saying? And that's market structure, man. That's market structure. So we want to be able to identify clean market structure for these entries. So if you think about it, right? If you really think about it, if we're going long, the best place to enter on a trade, right? When we're going long, we're looking at higher highs, higher lows, right? If you look at it, right? Where would be great entries on a bullish play? If you want to buy, what would be the best entries? Because sometimes we have to wait for a great entry, right? Sometimes you do have to wait. We're not just getting in anything. Are you going to get in at a high? If I was to enter here, right? Oh, we're in a bullish trend. I'm going to go ahead. I don't want to miss out. Price going up. And I'm entering here. Maybe I'll realize it. Maybe I don't. but I'm entering at a premium level. Why? Because price is about to sell off. Sellers understand that this is a premium level, so now they're ready to sell and get their profits. And the market got to breathe. So boom, I started losing money right up in this area. And guess what? I'm right about the trend. I am in a bullish trend, but I'm losing money because I entered at the wrong place. I entered at the wrong place. So now either I'm going to hold on to this trade, which is a gamble, right? Because now I clearly don't know what I'm doing, but I'm just holding on, and I start losing bread. Now some people, might get lucky. You'll hold on to the trade and then to push further up, but then you're not really understanding the concept. So you're eventually going to lose that money anyway. So what am I saying to y'all? If you're entering long, if you put in a bullish entry, if you're looking to buy, it is true when they say buy low and sell high. Absolutely. You want to get in at a low. So guess what? If we hanging out up in this area, like this is when we started watching the chart, we want to wait for price to pull back. That's all. Price pull back, and what is this again? A higher low. So for bullish entries and to buy, you want to buy at higher lows. It is the best risk management entry. Higher lows. The main thing when entering at higher lows is you want to make sure that it's really a higher low and that price is not reversing out, or that price is not looking to sweep liquidity. Sometimes it may even hit your stop loss. Like you enter here, right? And maybe your stop loss is like, maybe your stop loss is here. That's the main thing, is to make sure you placing a stop loss that is, that's reasonable. You don't want it to be too tight, because you see those wicks there. Price will wick and hunt for stop losses. But you also don't want your stop loss too wide, where if you take that loss, it's a nasty one. And now you can't either you can't get back in the trade, or you don't lost too much unnecessary money. The whole name of the game is to reserve capital, right? But we also have to take risks, but the risk that we take is calculated risk. So we set our stop loss at our lower high. We wait for confirmation. We wait for confirmation, y'all. We wait for confirmation. Even though we see the lower high, there's other confirmations we need to wait for to make sure that price is going to push up and that bulls are in control, okay? So we enter at lower highs. I keep saying that because I want you to just memorize it. We're making a bullish entry, or going long, or whenever we're buying, expected for price to push further up. The best entries are the entries that are at lower highs. Higher lows. I'm sorry. Higher lows. Because we're trading for price to go higher. We want to enter at the higher low. Higher low. Higher low. This is an equal low. Okay. Now you can enter at equal lows. Do I need to explain what equal lows are? I don't think I do. But I will touch up on equal lows or double bottoms. Okay. So equal low right here. This is a higher low. This low is actually higher than these two equal lows. Okay. Where's another higher low? Higher low. Boom. And if you notice, after each equal low or higher low, price gives us a nice move to the upside. That's good money right there. You don't want to enter at the top. You don't want to enter in the middle. You can enter in the middle as long as it's, it got to make sense. You don't want to enter higher, closer to the top. Okay? You don't want to enter closer to the top. All right. So now let's go back to this one. Same thing if we're going short, or if we're looking to sell, right? We want to sell at the top. We want to enter at the top. When you're buying, you want to buy at the bottom. When you're selling at the top. Let's go back again. When you're buying at the bottom, which is a what? A higher low, okay? Why do we buy at the bottom at the higher low? Because that is a discounted area. That is a cheaper area, right? We are now looking at a bearish trend, a sell, a downtrend. That's what you're looking at right now. So this is the bears, okay? So we sell at the top. Why? Because the top is the premium. If you're going to sell your house, right? You buy a house for, let's just, just as an example, for $100,000. You bought a house for $100,000. Are you going to sell that house for $50,000? Do you want to sell it for $50,000? Let's just say it like that. No. You want to sell it at the top. Where is the top? Hopefully the top is higher than what you paid for. But if you want to just to break even, you don't want to sell it no lower than $100,000, right? But we want premium prices. Premium price would be like if you doubled the price of that house, 200,000. Bet I'd rather sell this house at 200,050. That's how the charts work, y'all. So up here is a premium level. Now for those who are selling, let's say they probably got in up here, over here. These are all buyers who got in, they bought, they held. Now they're ready to sell, right? So let's just say, for example, actually we ain't got to use an example. This price down here is what? 628. They got in at 628. Let's look at the top where it started ranging, right? It got as high as like 695, right? 695. So we talking like close to what? $70, right? So that's they did price. The market determined that this was a premium area. It's time to pull back. It's time to sell some of this. So what? Those buyers who were in before, they got in at the top and they started selling off. They're not going to sell off if they made 628. Is it smart for them to sell right here? I mean, they'll break even. You know what I'm saying? But it's not really that great. So you want to sell at the top. All right. The top are lower highs, okay? We want to sell at the high, but we're selling at the lower high or the equal high. All right? So, almost finished with this part of the lesson real quick. All right, look. All right, boom. Sell-off starts here. Boom. We have a low. We have a higher low. This is our peak. This represents a high. This high is higher than the last high. Okay, so we have a higher low. This is where you would like to enter for sales. Now we have a lower low. We don't sell at the lower lows because as soon as you sell here at the lower low, what happens? Price going to come back up, right? We want to make money. Okay, boom. We have a higher low. That's a sell point. That's an entry. That's where you want to jump in to sell. As long as that trend line is respected, boom. Lower low, lower high. Lower low, lower high. Lower low. All right? Okay. That's that. So all of your entries are going to be at the highs, okay, when you're selling. Higher lows. That's where your entries are going to be at. And it's good to have these trend lines in place. You see what I'm saying? It's good to have these trend lines in place. That's where structure was broken. Let's go back to the bulls. Let's go back to the buyer side, right? Because I didn't draw a trend line for this. All right, so let's draw the trend line. Let's get rid of this. Y'all understand higher highs, higher lows. Higher highs, higher lows for bulls. Because we're talking about highs, right? We're going up. We're going long, highs. So we're looking at the higher highs and we're looking at the higher lows. Okay? All right, trend line. Same rule apply. I mean, trend line is a trend line, right? We want two touches. My bad, y'all. Hold on. All right. So I can start here on my trend line for two touches. Boom, I got two touches there. Look at that. Two touches. This is where we started. So I started my trend line there. Now, another way to let me do one more thing. Okay. Let's go back. We're at a low, we're at a high. What did I say we enter for going long or for buys? We want to enter at higher lows. We're not going to buy here. We're going to wait for it to pull back. When you hear people in the market in trading or, just in the stock market period say, hey, we're waiting for a pullback, this is what they're talking about. Maybe not from the chart standpoint, right? We are doing what's called technical analysis. We are in the chart. But now you see and understand what they're talking about. This is a pullback right here. Sometimes people who just don't understand think that the market is, is reversing out or, oh man, there's a sell-off, the market going down. It's just pulling back, man. It just needs room to breathe, right? Sometimes it pulls back because buyers are taking profits. Actually, that's what it is all the time, but for different reasons. But price is just pulling back. Now look, we are at a higher low. Also, this is a trend line, right? That's respected. This is a trend line that is respected, right? So that gives us what's called confluence. We have we have confirmation, okay? Two layers of confluence. We have a higher low plus a respecting trend line, okay? Boom. Higher high, right? Now, we got like somewhat of a higher low here. Would this be a good place to enter though? Would it? This would be a good place to actually wait, right? Now you could enter here, but it's just a very shallow pullback. So you're taking a risk. It doesn't mean that it's a bad entry. It's not a bad entry. It just might not be the best entry, okay? So think about a rubber band. You take a rubber band and you pull it back, right? If you pull it back just a couple centimeters and let go, what do you think is going to happen? Probably nothing. The rubber band is not going to go anywhere. If you take that, if you give it another try, you take that rubber band and you pull it all the way back as far as you can, not letting it pop, but pull it back, give it a nice stretch and then let it go. It's going to move further. It might fly across the room. That's how it happens in the market when it comes to pullbacks. The greater the pullback, the greater the stretch. The greater the stretch, the further it's going to go. Once it's done, pull it back, it's going to fly, right? So look at the market like that as well. Like you have these shallow pullbacks. There's a possibility. Nothing is guaranteed in the market, but it is for sure a possibility that I might not go far before returning to that area. And that's why we see this here. This pullback is very shallow compared to this one. Now look at the shallow pullback. It goes up a little bit. It kind of ranges up in here, right? It gives us a double bottom, and then it finally pushes up. So you can enter at a double bottom. That gives you a second confirmation that this support level is holding. Okay? I'm going to get in that in just a second. Boom. We have a higher high. Now, price return closer to the trend line this time. Now we have, this is like close to a triple bottom, but it's also approaching this. It's close to the trend line. This is valid right here. You don't have to always touch it, right, for your entry, but it's very close. It's showing that support is being held. This is a great level to enter at, okay? And then boom, look what happens. It's always kind of getting close or touching the trend line. Trend line is respected, man. Trend lines also give us our confirmation. You know what I'm saying? That, hey, this is the trend that we're in. So higher highs, higher lows are trend lined, okay? Same thing for this side here. Well, I already gave you the trend line for that side, okay? Now, it's important also for market structure that we look at support and resistance, okay? Very, very important. So let's do this. I mentioned about 5 minutes ago that support represents the floor. Support is the floor. Resistance is the ceiling. You may have heard everybody else explain it that way because that is honestly the most simple way to explain it. And it's the easiest way, from my experience and from others that I know, it is the easiest way to understand it. The floor, right? When you have a floor, we're not pushing past this floor. We're not going beneath this floor. That's how you know that bears are, they stand in their ground. Same thing with the ceilings. We're not pushing past this ceiling, right? I'm sorry, I'm tripping. Yeah, no, that's right. We're not pushing past the ceiling. That's how you know sellers are standing their ground. Like, yeah, this is the top. We are declaring this to be the top. It's time to take this boy back down. That's how you know sellers are in control. So watch this. Okay. Let's find the floor. We'll just start somewhere. All right. We'll say here. We'll say this is our floor. Let me make this green, right, to help y'all. Just to give you a more visual. All right, now look. We're green here. This is our floor, right? How can we say that's our floor? Hold on. There we go. Let's get rid of, we'll put this up here. We're going to use that later for our ceiling. All right. Okay, there we go. All right. So prices don't seem to push past that, right? Look at this. So our last resistance level, look over here where this arrow is. This is the top. This is resistance. Price didn't seem to push out of that. Looking at previous structure, you want to always look to the left. Look to the left. When price finally pushed out of that, it came down to retest it. And when y'all heard me reference like retesting a trend line, you always want to wait for a retest of market structure. Market structure is based off trend lines, horizontal lines, higher highs, lower lows, lower highs, higher highs. All of that consists of market structure. It's not just one thing, right? You have a few layers that goes into this, right? So you see this was once a resistance level. This was once the ceiling. So for bulls to confirm that they're in control, look at this. See the ceiling? Look at this. You got to break out of that ceiling, which you did, but it's not enough to break out of it because it could be a trap, right? So look, it broke out of it, and then it came back to retest this ceiling. So this ceiling is being retested, right? It's retesting, it's fighting with the bears. Like, okay, we got to take this area. We broke out, we made it past the wall. Now we actually got to take it. And the way we know that they took it is if it stands firm where it cannot push out. You'll see wicks come out, you'll see all that stuff, but then the body closes above it. Now we have a new floor. We have a floor now because it's resting right here on top of it. Am I making sense? All right, look. Now we need a new floor. Watch this. Our new high was right here, right? This is the previous high. Let's just say that. Let me do something else a little better. Hold on. We'll do it like this. All right, this is the previous, previous ceiling. Bulls broke out, retested that ceiling, right? When they broke out, they ended up creating a new high though, right? A new high was created, right? A higher high was created, which is also a new high, and came down and retested it, the previous high. The previous high is retested. We have a new floor. Bulls are set up. Plus, we're at the trend line. Plus, this is a lower high. I mean, a higher low. It's a higher low. Great entry, right? Now, watch this. Where is the previous structure at on this? Where's the previous structure at? Now, I would like to say, I would look at this area here. I'm looking at the previous high. We're going up to the upside. You want to look at the previous high, y'all. You want to look at the previous high. Okay, now, so what happens? Price breakout. We get a small, this is not even a retest. We just get like a shallow pause, which some would actually, it's not a bad entry. That's why I say trading styles are different. Some people would have entered on that. I would have entered there only because we have a gap here. And this confirms that we broke out of the gap and we held above the gap. Whole nother conversation for another day. Okay, so look, now watch this. Price breaks out once again. Boom, it comes back. Boom. Another, a very shallow pullback. Very shallow pullback, right? So look, what do it do? It push up and it comes back down again. Give us the double bottom that we talked about. We have a double bottom, okay? So I guess it's safe to say that this is our actual floor, right? Because that's what we're looking for. We're looking for a floor. This is our last previous high. We way past that. We way past that. Price is not always going to come back to revisit the previous high. You must take a note of that. If price takes off too far, you're now looking for your next floor. You're not looking to see if it's going to retest that previous high. Okay? We're too far gone at this point. So listen, we have established that, okay, we have a floor. It's ranging up in this area. And then it gives us our second bottom. Yeah, this is definitely the floor. Look at how that floor is respected. This is how you know that bulls are in control, is because they have a strong floor. Okay? That's our support level. Every floor is called a support level. Bulls have strong support. We are looking at strong support. We're looking at market structure right now. We're looking at strong support. We're looking at higher highs, higher lows. Bulls are strong, y'all. This is market structure 101. Replay this as much as you need, because trust me, man, it does take that much for you to drill it in your head, and then the more you do it, you become more familiar with it. You see what I'm saying? So, all right, let's say like for this third bottom. By the way, triple bottoms, y'all, are strong confirmation for bullish upside. Because if you look at the story, you just think about the concept. It is saying that bears have tried 3 times to push past this level and could not do it. Bulls have stood their ground all 3 times. Yeah, this is, the bulls got this. All right, so boom. Now I want to talk about this area right here. So now we have a new high, right? We have a higher high. In order for, let's say we're right here, right? I'm watching this area very close to trailing my stop loss tight as price is moving up, because this is the previous high. And I don't know if price is going to make it out of that. Like, we always look to the left for market structure, right? We don't know. We don't know. So either I'm trailing my stop loss very tight before I get to this area, or I just take my profits at this area and get out. I take profits and I'm out. Because the last time price reaches this area, it stopped and it sold off. You see what I'm saying? For bulls to be for sure that this is the area, right? It needs to be a break and retest of this area. This is the previous selling, right? The bulls have to establish a new floor. So in order to establish a new floor, this is with everything, y'all. Like, it must break out of the last resistance level, and then it must retest it. Once it retests it, it gives us our new support and our new floor. Same thing that happened down here. It's the same thing, rinse and repeat every single time, okay? So we get our breakout. Hold on. Boom. Where's our floor at now? Now we're trying to find the floor. I haven't quite found it yet, all right? I haven't quite found it yet. Hold on. Because what is happening here now? Now, we talked about bulls, bears, but this is a range. It's ranging. That's why I ain't found it. We getting, let me show you something. We got double bottoms. We got, it looks like it could be a double top. But we have equal highs and equal lows on both sides. This is a range, y'all. So sometimes, I used to always get caught up in this, and a lot of other people get caught up in this, man. Sometimes you don't know that you're in a range until you've been stopped out like 2 or 3 times. Like, man, what the hell is going on? I'm entering at the right places, and then you zoom out to a higher time frame, or just hit your mouse and zoom. You see, oh, damn, we're in a range. That's why. That's called being chopped out, okay? So it's good to identify ranges early, man. So remember I told you, like, watch out for them shallow pullbacks. Like, look at this right here. This is, I won't say a shallow pullback, but it's just not the best entry. It's not close to the trend line. It's not in an area where support is strong at. So this wasn't a great entry, no way, right? It's an entry, but it's not the best entry. And then when you consider where this high is, it's close to premium. So you're close to buying at a high level, right? That's where you can kind of tell that market structure is off a little bit. All right, and that's because we're starting to range. We're starting to consolidate. We're starting to chop. We're starting to liquidate. All right, so guess what? In order to go long from here, either you would go as close to this trend line as possible, or at your next pullback, or you would wait to break out of this trend. Out of this range. So how do you determine the range? Right here, look. These are the highs here, right? That's our range right there. We got to get a break and retest out of the top, or a break and retest out of the bottom. The break and retest out of the bottom is actually, we got our trend line. So you either going to break this trend line, and I might be going a little too deep on this, y'all, but you're either going to break this trend line, and when I say break, I mean a break and a retest. In order to go short, or in order to go long, you must break and retest this one here. Right? And now we're looking at what you call an ascending triangle. We're going to go into that. It's not even important. But that's how you look at market structure, man. It really comes down to that. Even if market structure is all you know, if you can just get real good at it and determining, like, okay, I promise you, man, it'll take your game to a whole nother level. Like, just looking at what we need right here. Like, look, price attempted to break and retest this. This is a good example. Look at this. See this green? Price broke out right there, but it didn't retest it. It fell back through. That's why you don't want to chase. You don't want to chase breakouts. But watch what happens right here. First of all, that's a great entry, by the way. It's close to your trend line. Boom. If you want to take this back up to the upside again, because you can trade the range. Some people say stay away from them. Nah, man, there's always money to be made. Now, you can if you want to, but don't say that there's no money to be made because it's a chop or range, because that's not true. So people just trade supply and demand within ranges and make bread. But let's say, like, if you would have entered here, which is a great entry, right? Boom, we enter right here. Now, we at the top. I can either take my money out because I'm trading a range. This is the top. Price has not proven that I can break out of this yet. It has only proven that it sells up here. So if I sell, it'll be a great idea. Or I can trail tight or wait to see what happens. Hey, that's on you, man. It's all about your risk. So, boom, it break out. Now, it comes down. I'm sure a lot of people jumped out, but then it faked the market. It faked everybody out, and it closed above the range, right? Now, this is our second close above this candle. we getting somewhere because the last time it only closed above it once and then it sold back down. So this time we get two closes, but with opposite candles. Now we get a doji above it. Then we get a little, I don't know if it's a spinning top or whatever above it. Now we have support. We actually have a retest. So price broke and it retested the range. It retested market structure. So guess what? Guess where the entry is, y'all? It wouldn't be a bad idea to enter right here, right? So then what happens after that? What can we do next? Hold on. I'm looking at a new trend line, for one. And everybody's style is different, but I'm going for two touches, right? I'm looking at a new trend line. There's many ways to do this, but just follow me for a second. We're gonna close out. So boom, I enter here, right? I enter there. This is my new entry because I have a support level, break and retest. And then I have a, let's see. Well, this is a break of a range. So now a new trend is starting. So I started my trend line, okay? Now I'm going to stay. How do I know how far to go in this trade, right? Especially if it's a new high, which it was, right? So we don't have any previous data. So how do we know how far to take it up? I have a trend line right there. As long as I stay above this trend line, I'm staying in the trade. As long as I stay above this trend line right here that I just made thick, I enter here. As long as I stay within this trend line, I'm staying in the trade, right? So that means that when price broke out of here, I got out. That's a nice move, y'all. This is the daily candle, by the way. So just as an example. So that's like saying we held this trade for 1, 2, 3, 4, 5 days and got out. That's good money. That's real good money. So I'm going to touch up. I'm going to do a part 2 of market structure. I hope this helped. Just locking down on this alone for your swing trades, for your day trades, even for leaps. I mean, market structure don't lie. You feel me? Gurus lie. People lie. These news media outlets lie. CEOs lie. Traders lie every day, but market structure don't lie. Look at what structure is telling you, and you will be successful, man. It's just as long as you listen to it. It's just as long as they respect it. Respect the structure, man. Part 2 is coming. I'm going to get at you in a minute. BitLegacy.